Good day, guys. I think a lot of people are FOMOing now, and it is perfectly understandable. We are humans, we have emotions, and we don't want to kind of lose out this chance to make money, or at least that's what all the analysts are saying. Right? All over the news, people are saying, when the market comes down, you gotta buy it. When the market comes down, you gotta buy it. So I'm receiving tons of random messages from people that are trying to, help ask me to accelerate their process of picking stocks, right? And I'm like, my goodness, bro, it's a long process. It's not like immediately now you want to learn, you pick up, you will make it. And these are some misconceptions through the conversation that I have with them, and I want to talk about it. I want to, just kind of throw this out so that we all can learn something and make sure we don't fall into all these kind of misconceptions, right? So today's topic will be the 3 major misconceptions for buying shares. So good morning, everyone. I welcome you to another day with the Financial Coconut. In our podcast, we'll be debunking financial myths, discovering best financial practices, discussing financial strategies that fits our unique life. You get it. Ultimately, empowering us to create a life we love while managing our finances well. So today's topic, 3 major misconceptions Singaporeans have about buying shares. So before we start, I want to clear something out. So if you're one of those people, one of the followers that have kind of reached out to ask these questions, cool stuff, it's because of your questions that I decided, to kind of collate all these questions and all these kind of different pointers that you guys talk to me about to then share with the broader community. So keep the questions coming and let's all learn together as a collective, right? So that is very, very cool. And of course, if you're still not part of the Telegram group, you should join the Telegram group, the Financial Coconut. And of course, if you're not on our Facebook page, you should like our Facebook page. So we're doing live streams every day until this COVID-19 situation is sorted and our lives can go back to, maybe not say pre-COVID but just like kind of more normal, not in such a restrictive kind of way. Of course, because COVID-19 is going to change the way we live, it's going to change the way we work, and we're going to talk about it in another episode. On top of that, if you are a supporter, you want to, keep the channel going, you want us to continue to create, please go to Ko-fi.com to just, buy us a coffee, just kind of let us know that you want us to keep creating. Yeah, some people ask me, why am I not on Patreon instead, right? Because Patreon is sucking 10% for every dollar that you put in. So I just want to make sure that there are people that want to support the channel, and then from there we will discuss about Patreon and right? So just everything is in the description below. So go and check the description, whether Telegram group, Facebook group, etc., Ko-fi page. Okay, so the topic for today is the 3 major misconceptions that Singaporeans have about buying shares, right? And actually, there are many misconceptions. I just feel that given what I have, the kind of interaction that I have with people, these are some of the major misconceptions that I feel a lot of people have. It's high frequency and, it can be quite an issue when you're looking to invest your money in the market. And the first point that we want to talk about, the first major misconception that many Singaporeans have is buy anything also will make money one because the market came down. So this is the classic issue with a lot of people, because they hear all this coffee shop uncle, auntie, right? They don't know much about equities. Okay, not everyone. Of course, there are some people that know about the stock market, but most of them hearsay. My friends say, my auntie say, my insurance agent say, my analyst say, everybody hearsay, right? So if they have no basis, they don't understand the market, they don't understand the businesses, they don't understand what they're buying, then they will tell you this kind of thing, buy anything also will make money, because everything come down now. The whole market is down, which is not wrong, right? It's not wrong that the market is down. The whole market is down. But it is a big issue when you say things like buy anything also will make money. And one of the first things that people ask me, or one of the common questions that people ask me at this point in time is, SIA Group can buy or not? AirAsia can buy or not? And in my head, I'm like, I tell you can buy, then if you make money, you also will not really thank me. But if I tell you cannot buy, then you miss out on the opportunity, then you also tao tia, right? So it's like, it's not about whether can buy or not, it's about at what price do you want to buy and how much do you know about the business, right? Because the reality today is that because of all this lockdown, because of COVID-19, all these different lockdowns in the market, a lot of tourism related businesses are, coming down a lot worse than the general market. Okay? And the truth is, right, this thing will probably last a lot longer than what most of the analysts say. Forget about V-shaped recovery, forget about U-shaped recovery. It's not going to be that fast. Until the vaccine is sorted, until we can kind of see a future where life can go back to, a little bit more normal, where you can go out, you're not in lockdown, you can spend, the economy can move, only then will you see the economy revive. And even then, the economy will not suddenly bounce back, suddenly everything come back. No, impossible, right? You're going to see a lot of bankruptcy coming in, you're going to see a lot of layoffs, you're going to see all these different things that will happen. And then post-COVID-19, people will slowly come back, the economy will rise. I mean, just look at China. They kind of got their things sorted already, right? But then again, their economy didn't pounce up in 2 weeks. It may not even come out in the next half a year. It's going to take time because the global economy is so intertwined. So if you buy the shares of SIA Group now, you buy the shares of AirAsia now, do you have the capacity and the emotional tenacity to last through until this thing is sorted? Especially when you don't know much, right? Then you'll be like, ayo, it go down again. Of course go down again, because, there is a good chance that they may go bankrupt. They're going to be stuck with all this infrastructure that they have, all these planes, all these hangars to put all the planes, and all the physical kind of airport. And, they rent all these are long-term lease, It's not like, tomorrow I want to fly there, I go and book, and then suddenly the airplane or suddenly open, I can take off, It's not like that, All the airplane companies, they have a lot of long-term costs, a lot of infrastructure costs that they have to put in, and then sell you the air ticket, right? So it is a very capital intensive, capital heavy business. And after hearing all this, would you still be interested to buying SIA? Would you still be interested to buying AirAsia? If you don't know much about them, you don't know the business, suddenly you hear all this, maybe be like, oh yeah, maybe true, then cannot buy already. You get the idea, because you don't know much about it and you are FOMOing, you're trying to jump into anything, and you hear people say this can buy, hear people say that can buy, then you just go in anything, buy anything, also make money. But that is not the truth. You need to understand that what goes up can go up further, what goes down can go down further. Right? So in an environment like that, it is very complicated, way beyond the idea of buy anything also will make money. You need to understand the fundamentals of businesses, and you need time to learn all these. It's unless you sit down and grind through half a year, every day read, learn, and plow through all the resources, you may not make it in time to even buy a share with clarity, as to why I buy this at this time, at this price. You'll not have that lah. Almost impossible. So I'm going to do another episode next week to talk about some of the indexes that you can consider and why I support index investing for the majority of people at this point in time, okay? But for today's topic, right, I just want to demystify this idea that buy anything also will make money, because the reality is you don't know what you're buying. You may just end up buying the chui one, You might buy the thing you think very beautiful, end up I'll go bankrupt. End up the thing don't work, right? Like another high flux. But of course, I'm not discouraging you to pick stocks and invest in the market. I think you should always stay invested, because time is your best asset when it comes to investing. The longer you're invested, research have shown that you tend to profit more. Okay, so we will talk about that in another podcast. But the reality is, picking stocks take time. We gotta learn. Okay, don't listen to the kopitiam uncle downstairs say buy anything also will make money. And yes, the second major misconception that a lot of Singaporeans have is, I need a lot of money to invest in the US stock market. Oh my goodness. Okay, let me first put it out there that in the US, you can buy a single share. And actually today, you can buy partial shares. It is not like Singapore where you need to buy everything in lots, right? 100 each, right? But in the US, you can buy single shares and you can buy partial shares. What does partial shares mean? Partial shares means if you have $200 and you want to invest in Amazon is trading $1,000 over dollars, you cannot afford, right? Then it's okay. You just invest $200. That you can do that, right? So that is a possibility today. And why do I keep encouraging people to invest in the US and, of course, invest in China? Because we need to understand that all our lives, right, in Singapore, right, is affected by the Singapore economy already. We already have a lot of exposure to the growth of the Singapore economy. Our HDB flats are tied to the land value. Our pay is tied to, the economy. Our expenses are tied to the economy. Everything is already tied to our CPF. We contribute 37%, and that is already tied to the economy, tied to the Singapore economy in many ways, right? So, of course, those are complex things at the back. But the reality is a lot of things that we do living in Singapore is tied to the economy. So, we already have a lot of exposure, risk exposure. Why do I say risk exposure? Because if Singapore economy don't do well, then it will affect your pay, it will affect your housing prices, it will affect your CPF, everything, right? So, it's already factored into a lot of our systems that are in place in Singapore. So that is the success of the system. That's also an issue with the system. So we got to recognize that. So having so much exposure already to Singapore's economy, we want to kind of expose ourselves elsewhere. We want to supposedly diversify, right? So diversify is also another big crazy word we'll talk about another day. But the reality is, if you want to diversify, you got to go elsewhere, right? You got to invest elsewhere. You got to get exposure in the US. You got to get exposure in China. Why these two economies? Because they are the ones churning a lot of productivity. They're making a lot of stuff, creating a lot of stuff, and innovating a lot of stuff. So their equity market is very vibrant because they got a lot of innovation, a lot of new things, a lot of expansion in their businesses and in their economy. So definitely stay invested in these two places. And specifically when it comes to the US, I think a lot of people have this misconception that, I need a lot of money to invest in the US. So you don't need a lot of money to invest in the US. Check with your brokerage. Do they have partial shares? And check with your brokerage how you can get exposure to the US market. Right, so all these are extremely important if you are into picking stocks. That means you are already quite avid picking all the Singapore stocks, then definitely go swim with the sharks in the US market, right? That is the leading, stock market in the world. By capital value, by number of IPO, blah, 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 everything, whatever you count, right? I think they are number one, number two. Okay, so that is the leading market. Definitely go there to search for all your good companies, right? So you don't need a lot of money to invest in the US. You can go there even with whatever much you have. Okay, just need to check with your brokerage. Different brokerage have different policies. Okay, and the third major misconception that a lot of people have is that the share price lower means I can buy more ma. Well, I honestly think this is one of the deadliest thoughts, because it drives you to look for the cheaper shares, a few cents, 10, 20, 50 cents kind of shares, and when Singaporeans are so used to this kind of cents, right, then when they look at the US, they're like, wow, this one 几千块, that $1,000, man, impossible to touch, right? They don't understand that it is not about the price of the share, it is about the total value of the company that is important. And in this case, when I say total value, I mean market capitalization. This is some word that you'll hear a lot. Essentially, it is a share price times the total amount of shares, right? So if each share is at $1 and there is like 100 million shares, then this whole company is worth $100 million by market pricing, right? So the market price it to be $100 million. Okay, some people will, of course, talk about value investing, talk about the underlying value, all those things. Yes, I understand. I think it's important. But now we talk about market cap. So that is how the market prices this whole company, right? So some company can be trading at $1 and the whole company can be worth 10 million because they have 10 million shares. And another company can be trading at $2 and they have like 5 million shares and they are also worth $10 million overall. Right, so we want to see the whole market cap, the whole value, which is share price times total number of shares. It's not about how cheap each share is. Right, and very good chance that if you are buying the very cheap shares, right, they are in the range of the penny stocks, they are in the range of the extremely volatile and the kind of companies that I don't even know why you are there lah. You better have some super inside information. Your brother, uncle, mother, sister, someone is working in the company. If not please don't go into those kind of weird things. Okay, if you are new, you're starting, go for mass indexes, diversified portfolios, and over time you want to learn, you can pick some stocks, and then we go from there step by step. And also, you need to understand that it is not about how many shares you own. It's like, okay, I own 100 shares of this thing. Doesn't mean, it's more valuable than owning 2 shares of the other thing. Because it's about the amount of capital that you invest. If both are $1,000, then both are your equal bets. right? It can be this thing is worth $10 each share, then $1,000 you put in, you buy 100 shares, and the other thing is worth $1,000 one share, and then you buy just one share. Both you also invest $1,000, right? In the market of investing, we look at percentage movements. We don't look at absolute share price movement only. Right, so all these things are very important for you to understand. It is not that the share price lower, you buy more, means you are more invested, means you can make more. It doesn't work that way. Okay, we want to see the overall company's market capitalization, the overall price value of the company, and we also want to see how much we invest. Right, that is more important than how many shares we own. Okay, invest $1,000 or $5,000. That is important. Not I got 5,000 share, 10,000 share, 1 million share. That's not how it works. We want to see the price value that we put in, right? And because you stay until here, right? You stay until the last point, right? I'm going to share with you something that I think is very, very dangerous that a lot of people are doing. That is, a lot of people, because of this COVID-19 situation, right, are chasing after companies that are like shining in this COVID-19 case. Companies like Zoom, companies that make gloves, make masks, 3M, all these kind of different companies, right? And you see their share price going up because everyone is buying it, right? It's a demand supply thing. If a lot of people want that share, a lot of people want to own that company, then the share price will go up, right? But I caution you against going into something like that, because if you think about it, post COVID-19, do you think still so many people wear masks? You think so many people wear gloves? I think more people wear condom. But anyway, you get the idea, right? You want to see what is in the long-term future. We are not interested in the short-term kind of demand surge, right? It's companies like Zoom. Currently, a lot of people use it, but down the road, are a lot of people still going to continue using it? We're not sure. All right, so only if you are very sophisticated, you can give me a very strong thesis as to why you buy all these things, all these different companies, then okay, I think that's fair. But don't follow the trend and chase after like COVID-19 shining stars, because COVID-19 will not be here to stay. I have very good faith in human progress. I have very good faith in healthcare system and the research system, that we will create vaccines, we will create medication to curb this virus. Okay, human ingenuity has got us so far and will get us further. How far? I'm not sure. I'm not a virus expert, but I have that underlying belief, right? COVID-19 will pass and we want to come out stronger. So I'm going to recap these 3 major misconceptions that Singaporeans have about buying shares. Number 1 is buy anything, also make money. That's not how it works. Whatever that goes down can go down further. Whatever can go up further. You want to understand what you are buying, right? At what price and why is this business valuable for you? That's important. And number 2 is that I need a lot of money to invest in the US. That is not true also, right? You don't need a lot of money to invest in the US. In the US, you can buy one share, or these days you can buy partial shares. It's not like Singapore, a lot system, right? So it's about how much dollar value you put in. $200, $500, $1,000, not about how many shares, okay? Remember. And the third major misconception is the share price lower means I can buy more, ma. Like we said, it is not about the individual share price. We want to see the total value, the market capitalization of the company, and we want to know how much money we are putting into each different stock, right? It is not about the share price alone, okay? It's not about how much share you own. Don't song, you own 100, 200, like very song like that, but that's not how it works, okay? So I hope you learned something useful today. See ya! Hey, I hope you learned something useful today and truly appreciate that you took time off to better your life with the financial coconut. Knowledge is that much more powerful and interesting when shared, debated, and discussed. I hope you would share what you've gained with people you love, and I want to hear from you. Give me some questions and help me along with building a community of financially savvy coconuts. I hope together we can fulfill our curious minds and our desire for clarity. Join our community Telegram group. Reach out to us on Facebook. Just search the Financial Coconut. And if you enjoy the podcast, feel that you want to keep us growing and stay independent, do buy us a kopi at ko-fi.com. ko-fi.com. With that, have a great day ahead, stay tuned next week, and always remember, personal finance can be chill, clear, and sustainable for all.